Don't trade with MACD until you've watched this video. MACD is a basic tool in TradingView. Almost every beginner investor uses it, and almost everyone uses it completely wrong. In this video, I'll show you my complete guide. I'll show you how to trade properly using MACD, so you can stop blowing your deposit. You're on the ViceFlow channel. My name is Alex. Let's get started. Let's break it down and start with the advantages of MACD. MACD is a free tool. You can get it just by going to TradingView. Just type it in the search, and there you go. The moving average convergence divergence is already open on your chart. By the way, you can use MACD on any trading platform, with any broker or exchange. It's available everywhere. It's included in the basic standard settings, and that's exactly what makes this tool so good. So now MACD is on our chart. How to trade properly using this indicator? It's all as simple as can be. You just need to wait for the moving averages to cross, for the signal line to cross the moving average on the chart, which you can see right now. If this crossover happens from below upwards, then that's a signal to go long. If, on the other hand, the crossover happens from above downwards, then that's a signal for a market drop to go short. And as we can see, at least in theory, sometimes this really does work. Sometimes we see on the chart that it hits the targets. In fact, a drop begins, a downward movement on the chart after the crossover from above downwards. However, sometimes the long trades don't work out. That is, the crossover starts from below upwards, but the market doesn't go up. The signal didn't work out. You might say, that's totally fine. There are false signals sometimes. Yes, that's really the case. We can find examples where the signal line crosses and the market goes up when the signal line crosses from below upwards. So, it's case by case, just like everything else in investing and trading. Really, let's move on to the next point. And there's a certain histogram. We'll remove the moving average from the chart, go into the MACD settings, and uncheck the box. From here, and after that, we're left with just the histogram. It's simply a histogram in the form of an oscillator. And how can you trade using this histogram? It's as straightforward as it gets. If there's a divergence and the price is falling, we simply draw a trend line along the lowest points of the candles, and we can see that, indeed, at that moment the price is dropping. What do we see on the histogram? At that moment, the histogram is rising. This is called divergence, or decorrelation. This is the main signal to enter a long position, and we can see that this works out on the chart. The same goes for the price. In the same way, we draw a trend line along the highs of the candles. So, we see, here is the actual high. After that, the price went up and set a new high. We drew a trend line. However, as we can see on the chart, at this moment the histogram is falling, which indicates that it's time to enter a short position. And as we can see, a downward movement started on the chart. There's a certain misconception online that you can only use the MACD with the signal lines. The first option we looked at, or in other words, just using the histogram. The second option we discussed, but that's not entirely correct. You can use them together when there's both divergence on the histogram and, in addition to that, the signal line indicates that it's time to enter a trade. That's really great. It works well in combination. As with everything, whether it's in investing, trading, or just life in general. Overall, there's always another side to the coin. And the main drawback of the MACD is that it's not always accurate. There's nothing you can do about that. It's the most basic, most standard indicator, which was created a long time ago. Accordingly, any new markets, whether it's cryptocurrency or highly volatile stock markets, the American market, the European market, all of these are quite volatile, and especially the crypto market, which is what we're looking at here. And the MACD just isn't accurate enough in these cases. We can see there are certain types of errors here with the first strategy, or here with the second strategy. The strategies didn't work out, but we have an improved version of the MACD, which works as precisely and accurately as possible and, believe it or not, without a single mistake. You can get our indicator as easily as possible through the link in the description. Just open it on TradingView, and that's it. The histogram will appear on your chart. Let's take a look at the charts and compare examples where, in fact, the MACD histogram made a mistake, but our improved MACD did not. So, we've opened the chart, and here in the first case is our indicator, our improved closed version. In the second case, we have the standard MACD, and where the MACD showed a divergence, that very divergence, our indicator hadn't shown a divergence yet. So, our indicator demonstrated a better version of the MACD. An immediate divergence occurred right when it was final. That is, exactly at the moment when it was necessary to enter the trade, unlike the standard MACD. In the same way, we have the opposite case, when, in fact, there is a reverse divergence. We can see that it happens a lot, very often. There was a divergence on the standard MACD chart here, and even here. However, in fact, we can see that our indicator showed the most accurate divergence, and it was exactly at that moment that it was necessary to enter the trade, and not in any other way, not earlier, as the standard indicator suggested. That's why it caught the very bottom, and the upward movement. Our indicator, our improved version of the MACD, identified it correctly, unlike the standard indicator. You can get the indicator via the link in the description. It's as simple as it gets. Just open it on the TradingView chart and that's it. You have an improved version, which, as we've seen, never shows any errors. And on top of that, You can also use it together with our previous indicators that we've looked at. The green-red line, the red zone, is always the area of perfect asset distribution, meaning that's where you should be selling. We can see that it worked out here, 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 and here. Not a single mistake, not a single loss, just like the green zone. Here, 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 and here. Not a single mistake, not a single loss. Perfect execution, perfect accumulation zone. Buy zone. Everything is as simple as it gets. I'll leave a link to all our indicators in the description below the video. If you found this video helpful, be sure to give it a like. It really helps the channel grow and motivates me to make more videos, more content for you. This was Alex with you. See you soon.